Welcome everyone to the Kendall Report. It is Wednesday night. It's hard to believe, halfway through the week. It's been so much excitement and volatility. I mentioned last night, if you recall, I said they're going to come up with more banks. We're going to get more noise out of this banking situation, and we did get that for sure. And it's interesting because somebody last night mentioned is Credit Suisse next? And it's funny that was the headline, but they actually did something interesting. This was a total hoax today. Credit Suisse is not going anywhere. That's been, best way I can tell you, that's been a dumpster fire for like multiple years. It's a bad bank. There's nothing good about it. But think about this. The Swiss are a banking country. They're not going to let that thing go no matter what happens. So just recently in the last hour, I think that's maybe why we got a bid in the futures here recently, is that we got a news story that they're going to get $50 billion from the Swiss National Bank. And, the ECB's there. I guess they're not part of that, so they can't play, right? But the ECB is going to back up anybody else that gets any kind of news around this. So just know that the conspiracy, whatever you want to call it, is on. These central banks, everybody is going to back up everything they can. But the Swiss National Bank is not going to let Credit Suisse go down. There's really just two big banks in Switzerland, they're primary banks anyway, and they're not going anywhere. And I kind of laughed at the story. Algo's got it going pretty good. They're able to carry that story over into other banks. Republic Bank, of course, is the next big news here, trying to force that down. And the hedgies are pushing on the banking system pretty hard. It looks to me we're very close to, went through not as many as I did last weekend. I went through about 300 bank stocks, and it looks to me that we're pretty close to maybe a rebound in the bank stocks here coming into Friday. We've seen some of them start to bounce, and I believe Republic announced it's up like, and somebody can confirm this, but I think it's up like 10+%. There was a pop earlier because they announced that they're trying to align with the larger bank. Probably Morgan's going to buy everybody, right? JP is going to own everything. But the point is that, I'm not buying totally into the banking crisis scenario. I get what happened with SBV. Somebody was talking earlier. I saw that between Signature and SVB, this is like almost as big as 2008 crisis. It on a relative basis, it is not. They're big banks. They are big issues, but we didn't have multi-trillion-dollar banks in 2008. We do now, and so if you start looking at the overall banking system, it's been a parabolic curve in growth, and that's where a lot of these issues are coming about. So I do want to just put something out early in the broadcast tonight. Tomorrow at around between 11 and 11:30 Eastern Time, myself, Dr. James Baker, and Phil Zweig, who is the guy who wrote the story that took down Penn Square Bank in Oklahoma back in the day, and has been a financial writer for many years. Amazing guy. I met him through Jim Baker, and they've known each other for a long time. But we're going to be on a Twitter space with Mario Nafal, and I will tweet this out. So if you're following me on Twitter, I'll put this out. And my expectation is that they kind of run a Twitter space all day long. So we're going to come up. I'm going to somewhat co-host the situation and work with Phil and with Dr. Baker on this. So we're going to get through this, and I suspect we'll be doing some Twitter spaces, possibly on my Twitter account or something. Well, we'll do some backups depending on what comes out of tomorrow. We don't get to get enough of what we wanted out. At least everybody will know it's there, and we'll do something on our own as well. I suspect that's going to be a thing. Possibly after, if you don't know Mario, he does huge spaces, 10, 20,000 people live at a time, and the replays are huge as well. I think they've had a multi-million hit replays on their channel. So show up there tomorrow. I don't know how long it's going to go. We're going to do a Q&A and a whole bit. So it's on schedule to be there tomorrow. So make sure you come to that. So this leads in because one of the things that Jim and I have been talking about, I mentioned this on Sunday, we've been trying to break down what's going on. We both came up with stumbled in the same thing today. Is we don't know very much about anything on how the foreign banks trying to look at balance sheets and trying to figure out how assets are. They're different than how we handle things here. But like I said, just back to the banking situation, just know that Credit Suisse is going nowhere. Okay, and it's still going to be just as bad bank as yesterday. And Deutsche is the same thing. You know, Bundesbank, they're not going anywhere as well. So as bad as Deutsche Bank is, these banks aren't going anywhere. They're they are Germany, they are Switzerland. They're just not going anywhere, and they're going to make sure of that. I guarantee you that. And on the Germany side, you've got the ECB as well there. But so I'm looking forward to tomorrow's space because I think I've been having some very deep discussions about what's going on in the banking system. I'm not blowing off that there's something going on here, but what I am saying is that it's not going to be material. You saw how the markets acted today. We did see S&P didn't get positive, but NASDAQ came back really strongly. It was a pretty insane rally that we saw on NASDAQ. And we're just seeing this volatility. And in real terms, when I go through the technicals here in a few minutes on the S&P, you'll see we're just in that sideways range from that standpoint. I'm just looking at some of my notes. This was interesting because it's depending on how you look at it. Let's go to what news came out today, other than the story that was driving the markets and back to the banks. PPI came in minus 0.1 instead of plus 0.3, but they changed last month. They revised last month, so it kind of was a wash. It was basically in line with what was expected. You had a 6.0 year over year. Everything came in line, and those are bad numbers. And I've been telling you for a while that we're going to continue to see inflation higher for longer. We're going to see interest rates higher for longer. One of the things that I named, and I'm going to get into this in a minute once I get through the news, I'm going to talk about something that I thought about a little while ago, and I'm going to unpack it and discuss it with you folks. But PPI was a good number. Retail sales were off again. So the stuff that was expected to be weak was weak. I'll just kind of summarize, and that was today. So tomorrow we got claims coming out, 215 expected continued claims last week, 1.718. I've been telling you, I don't care what that number is as long as it stays under 2 million, that's fine with me. And then that's pretty much it. So let's discuss something that came up just a little bit ago when I was doing my homework. And I have to apologize for being late again tonight. This time change is killing me. I used to come on live at 7, now it's 6, and I'm just off. I was working from home today, so by the time I got over here to the studio, anyway, here I am. But let's talk about something that I think is worth discussing. I realized, we're looking at how these rates are just plummeting on the front end, the 2-year, the 10s, everything just plummeting, right? We're seeing rates that we didn't think we'd see for a while. It's the opposite of what we're seeing. And I think it's possible with everything that's coming on. The Fed's, basically opened the discount window. I've said this last night, it's almost one size fits all. if you have the right collateral, you're welcome. Okay. Joe Biden got it wrong. Not all depositors are guaranteed. That was a misstatement, another gaffe by this guy. But the bottom line is, what might have happened and why rates are coming off is it's possible just for a few days, maybe the Fed stopped QT and they backed off on selling of securities. If they did that seller being out of the market to keep rates up, that would be enough to drive it down with the flight to quality. So I realize that, they might have just backed off. They can still claim they're selling. They can still keep all the rhetoric and their credibility. I'll put credibility, I'll do air quotes on credibility, but they can do this. And what is likely to happen is this drop in rates is basically fixing a lot of this gap, a big portion of it, with this mismatch in yields and the depreciation on the investment portfolio. So I hope you folks can make it to the Twitter space tomorrow, because I know some things I'm going to make sure that we get out when I say we, Dr. Baker and Phil Zweig and myself, that some of the deep talks we've had about these things. So we're going to pull that out, and hopefully I'm going to get our segment recorded, and I'll be able to do a replay maybe on YouTube, something like that. We'll hopefully get all that figured out. So anyway, that may be what's going on. That may be what's triggering the yields and some of the movement in the yield curve, so they can kind of pick where they're selling and get the yield curve just to do what they want. That's a strong possibility. It's a little bit. I don't have any evidence that that's what's happening, other than what's going on in yields, and that how drastic some of these moves are. I forget the number. I don't want to quote the number I think it is, but there was a big number on the 2-year that it declined. So just know that that's probably, I thought, who's buying all these? Or then a question came up, maybe the Fed's not selling, and that was it. So I've sunk my putt on that. So let's go ahead and get into the database. Not much going on there. I think I can get through the stream fairly quickly tonight, and we'll be able to get ready. Like I said, just mark your calendars. Follow me on Twitter. When I get done with this stream tonight, I will tweet out about the meeting tomorrow on Mario Space. So we'll looking forward to being there tomorrow. So let's go ahead and get into the Wavetech database. All right, so we're at 13.70 on the short-term database. We had 365 sell signals, 268 buys, so slight negative. We were 14 and change yesterday. So we're just working this area. This rotation is happening. A little bit more selling one day and then a little bit more buying the next day. But I think we probably are trying to stabilize here, and maybe as we come in toward the end of the week, you'll see when we get in the technicals, there's still some rough waters ahead. We're not out of this thing just yet, and I'll go through that in a minute. But as far as the database goes, just a rotation going on here. So let's go ahead and get into the technicals on the S&P. Okay, so here's the hourly chart. We're getting close to a peak. It was interesting, is a couple hours ago I was watching these fib targets here, and the fib targets were for a move to 39.23. That was fib target 1. Fib target 2, 45. This is the June contract, by the way. And then on fib target 3 was 59. We traded up to 47. We hit that fib target 2, which was 45.85. And so we definitely saw a decent bid come in here. And it looks like we're about to maybe instead of normally the last several days, I've been talking about how looks like we're rallying into strength into London. It looks like we could flatten out to come down a little bit back into these moving average 39.17, 39.24 is going to be the levels that you're going to want to watch in here as we go through overnight. It's interesting because we've satisfied all these patterns and we continue to get, I've talked about this. I'll just draw these in real quick because I want to make sure all of our eyes are at the same place here. But these are what I call these volatility ranges. When there's news or something that's coming on, we start to get these little volatility. And these areas where I just drawn here are areas that we get what I call, they're basically bubble bottoms. I don't know a better way to call them. There's if I put the Wavetech webs up here, there's some other patterns that I could discuss, but I just, generally speaking, these are areas that we get, and they tend to happen when there's news out. So obviously we had PPI, and really PPI didn't even matter. The entire Credit Suisse story, by the way, the entire Credit Suisse story was based on a Saudi investor that said they weren't going to put money in there, and they managed to get that erroneous story to drive the markets, which is absolutely amazing what they pulled off there, whoever they is. But this was, like I said earlier, this narrative on the Swiss bank going down and all that is not even close. Like I said, if the Swiss can't, I know it's a bad bank, but if the Swiss are having banks failed, then we're all screwed because, like I said, they're a banking community, So I don't see that happening there. So let's go to the daily chart here, and I think this is where I'm talking about. Looked like we're going to get some downside, but it moderated today. Even though we started off weak, we saw that a bit of a rebound here, and we're coming into some pretty heavy resistance. So 39.61. I just said we printed 39.47. Go full screen here so you can see this. We're coming into this resistance, 39.61. 39.93 is the 21 period moving average. If we look at the algos over here, it looks like we have one more day down. So Thursday could have a little more pressure with these downward sloping moving averages that are in this pattern. And we look at the market grid for today. We're really looking at R2, let's see, R1 is 39.79, which maps out pretty good with the 21 period moving average. And S1 right now is 39.29, and then S2 is 39.01. So I still think we're getting elevated ranges, whether they I keep mentioning they, and they is whoever's generating this news. We're going to continue to get lots of noise around this banking system. And, if Republic comes up with a buyer, all this stuff, I think ultimately, like I said, 2 weeks from now, we look at our watch, we're going to go, what was that banking crisis? I don't think we're going to be talking about it in a couple of weeks. I think this is going to hammer out, and we'll just see. We'll play it day by day. The technicals here on the S&P are not good, but they're not disastrous either. There's not implications that the market's going to collapse here. It's just more of the sideways range that I've been talking about for a while. And it was 39.50, 40.50. Now it's maybe 38.50, 39.50 where we're trading right now is the upper end of this. Maybe we get into these numbers that I just discussed at 79 up to as high as 90. It just depends. If there's some news on the other side of the street, I noticed that they were even beating on the guys at Charles Schwab asking questions. The Schwab Bank was reported to be minus 171% upside down, and it isn't good for Schwab. but it is about a minus 41. And technically speaking, they should be a plus 100, 117. So it's not a good number. It's probably not the number that they get destroyed on. So I just want to kind of keep that out there. And it looks like it was interesting. I won't cover that stock tonight, but it does look like there's some upward bias coming in to Charles Schwab. And I think across the board, like I mentioned earlier in the opening comments, that we're going to have probably some bidding in some of these banks, and whether, like I said, maybe Republic leads the way by getting the deal, and then everybody looks at these intermediate to smaller banks and they're just going to get swallowed up. And maybe the worst case that happens is there's a consolidation of the banking system happens and the big guys get bigger and they just kind of suck some of these people in. We'll see what the ultimate goal is and see what happens from that standpoint. So we'll go to NASDAQ next, and it's interesting. This is a daily NASDAQ, and we had a great day yesterday. I mean, you pretty much went out toward the high end of the range here. Let me just bring up so we can see the numbers. But we got up to 12,407. And I remember talking about some of these numbers on the market grid. They seemed like maybe it wasn't reachable, but yesterday, let me put the grid up here so we can just see where we got to. Yesterday, R2, 12,514, and we got up to 12,462. So we came just shy of R2. On the downside, we got to 12,096. And if we look at the grid, 12,000, S3 was 12,065. So it was an interesting day. So far today, we're looking at a potential range. I'm going with kind of an R1, S1, using those two numbers as a pivot. So if we take out R1, then we rotate to 2. If we take out S1, we'll rotate to 1. It's really a pivotable day just because we're looking at this should be. It looks like as we come into Thursday, we probably are going to see some backfilling. The different is completely different on the NASDAQ is that we have upward sloping moving averages here. 10, 21, 40 are all crossing and are positive. PPM1 is a 0.31, which is trend mode. PPM2 is 0.13 positive, and PPM3 is 0.21. So all three of these averages are going up. I'm going to back up to ES just for a second to compare what's going on there. But look at this. ES, they're all down. We got negative PPM1, negative PPM2. PPM3 is flat. It's well above the markets. But the point here is that we're in different configurations. And a lot of times I will talk about the way these patterns are set up. Maybe one market's a leader over the other, and it looks like there's positive trends here in the NASDAQ. So they may prevail. We've actually made overnight so far a higher high than yesterday. We're at 12,462. Yesterday's high, 12,407. So we're printing up above there. And I would look to these moving averages to be a key support. 12,222. We look at the market grid here, and you're going to see the S2 numbers, 12,159. So that's going to possibly be the S2, maybe R1, S2. We could see a little bit higher. We could see R2, S2. I think volatility is going to stay kicked up here for at least a couple more days. Okay, next we'll cover the Russell. The Russell is getting potentially one of these bubble bottoms, and it looks like all of these markets look like we're one day. So Thursday, we should be printing possibly the low, especially on the S&P and the Russell. We should start to rebound toward the 10-period moving average. On this case, on the Russell, we're looking at the number at 1825. We're printing 1774, so that's a pretty good run up there. But just within the market grid expectations for today, S3 is 1838. So R2 S3 is 1817, 1838. That's going to put us right in toward that 10-period moving average, and that'll be pretty good resistance. I would expect to see some sort of rejection out of those numbers. And on the S&P, I would look at that same simple moving averages as a point where you're probably going to see some rejection off of here. I still think we're in this consolidation phase and still in this choppy range, really trendless from that standpoint. All right, so we'll take a look at the 10-year yields. Amazing numbers, and we printed down yesterday down to 3.38. I mentioned the other day if we took out 3.65 that we could print to 3.25. We got a little bit of a reversal. There's still downward pressure. This is going to be probably take anywhere from 5 to 8 sessions if we stabilize here to get prices to move back up. But you can see the algos are still printing down, and as I told you last night, what the algos are projecting is that these moving averages are going to come down into the pattern. So we should get to meet here the I said 365, but 366 is this pivot number right here. It's actually 365.9. So it's right at 366. That's going to be resistance now on the upside, and we're probably going to rebound back into that range a bit. Let's take a quick look at the futures. Just look at the 10-year notes. And as I talked about yesterday, we did get another blast up. We went all the way. We look at the market grid for yesterday. The top end of the market grid, 115.31, basically 116. The high 115.20. But the previous day high was right there at 31. Yesterday's high was 31. This is overnight what we're seeing here. So we printed up to RXT. We're probably going to come back in. This 200-day moving average is going to be the pivot point here. And that right now is 114.14. So that's going to be the number to watch from that standpoint. That old pivot number, these red dots were, if you can see my cursor moving here, that was negated off the bottom. But the cash numbers are still out there at 3, like I said, 3.66 is the pivot. So that'll be resistance on the yields going up, and that'll be support. That's going to put us probably around here 113.10, 113.12 on the futures. Now, something I did not cover yesterday, but let's take a look because I want you to see what's going on. And this goes to what I was talking about and what the Fed might be doing. Is it looks like they've stopped selling. The 1030 spread is just vertical here. The middle chart is the 530s, and that's no longer inverted, but it is steepening. And if it continues to steepen, then I'm going to go with the fact that there's two things that are happening. One is that there's a seller's disappeared, which is most likely the Fed, and there's still some decent buyers trying to capture the yield. So think about what's happened in these yields over the past week. Really, it's amazing what a week makes in difference. So, but these spreads are it. And I've talked to you folks before. This 530 spread is the spread for me in the as far as the banking system goes. This is where tells me a lot about what's going on with stuff. I used to work with a lot of the major banks and consulting their trading rooms. So this is one of the spreads that we spent the most time on, is it reflects a lot of the internal spreads that's going on, and it really gets you to a duration. I've said this before, is that banks don't really take any risk. Is not very calculated, or they shouldn't. Unfortunately, what's happened recently is they've taken more risk because of in my opinion, they haven't hedged as some of these spreads like we used to. Just putting these spreads on can change a lot in what happens with the balance sheets. But anyway, the point is, this is where tells me a lot about the health of the banking system on a whole, or how it should be, concerning everybody is positioned properly. And I think with what we've seen recently with SVB and all the banks and all the scrutiny that's going on, is I think that is really everybody's trying to readjust their durations. They're trying to look at their investment book really, really closely. And they should have always been doing it, but everybody got a little complacent because even though yields have went up, it's a lot. And I continue to have the argument that rates have went up faster, and I'm hoping that in the discussion tomorrow with on the Twitter Spaces, is that we can kind of unpack some of the things that happened back in 1980 through the 80s, but primarily 1980 through probably 1984 or 5. Those were very significant times, and how yield curves were moving and all that stuff. And I know Phil's going to have a lot to talk about that, because he covered that in a lot of detail at the time. So looking forward to that discussion. Next, we'll cover crude. Been expecting crude to hold. It went through Fibonacci 3, just a free fall here on crude oil. And, we printed down. I thought we were going to hold around 70. Right now, we're trading 68.02. We've got seriously negative PPMs. I was thinking that we would get this. There's a bottom being forecasted coming in here, but it looks like this bottom is going obviously at lower prices. Like I said, I thought we'd hold right about here on this fib target 2. We went through fib target 3. Let me get that number up there so you can see exactly what it is. Yeah, fib target 3 was 69.91, so we went through that. We traded all the way down here to the 65.65 level. And these are some levels that I talked about going back in these previous calculations here, down to 66.23, 63.78. I really didn't think those were very realistic as far as objectives go, but here we are. There they are right there. There was expectation was we'd stay in this trend. We've now broken below this box that I talked about, and this all happened yesterday. We're not really getting any rebound overnight. We're still down 42 right now from the close. So we're up a little bit, and we're maintaining just above the market grid. So did we get it? Let me take a look here real quick. Yeah, so yesterday's STX was 67.45, and we went out at 67.61. So we came just close to an STX buy signal, but did not get one. But regardless of that, I think we start to try to come back in. Yesterday's range was huge. We had 72, 56, 65, 65. So there was a lot going down. I believe the energy sector just got absolutely pummeled yesterday. I think down almost 13%, something like that. So I think that this is pretty interesting that we're still seeing deterioration here. And I did look at our XLE hack, and I think we're 70, almost 68% in cash, something like that. So there's not many stocks to even own in that energy sector anymore. That's definitely played out. That was a great trade last year, not a very good trade this year. So we caught another bid in gold yesterday. I thought we would fade back towards 80. We had a range of 89, so we did get into the 80 handle. 89.50 to 1942, and we closed at 31. Right now, overnight, we're printing back at 1914. And what I was talking about last night is that we should get a consolidation. I didn't expect we would go almost to RXT on the upside. R3 yesterday, let me just bring that number up so we can see it. R3 was 38 and RXT was 46. So we did print, let me just get the right number here. We did print up just under the RXT number. And like I said, we should stay within this range. There's actually a pivot that's in here at right at 1900 now, but I think we stay in this range within this box formation. I did see somebody talking, I think comment on the YouTube channel or something, that they're not seeing these flats on the indicators. You should, basically the flat is just where the, let me expand this just so you can see this a little bit more. But the top end of where the market grid is and the bottom end, they just kind of go flat in a sideways mode. And that typically sets up this consolidation, which would be in this wide range. The fact that in the last 4 sessions, we've had 2 really large ranges here. Volatility is going to stay up for at least another 2 sessions. Possibly as we come into early next week, we'll see a contraction of volatility, and then we'll be able to read this consolidation, whether we're going to get next leg up or not. And I'll wait toward the end of the week before we cover the weekly charts at that time. There's really no relevance at this moment. So Bitcoin almost looks the same way. We'll cover this in final market. We traded up to RTX yesterday. Pretty crazy numbers. We got all the way up to 26,533. And now we've got this big box formation. So what should happen with this spike in volatility? So we moved what? In 3 sessions, we printed 15,569 to 26,000. So we had $10,000 run right here just in those 3 sessions, 4 sessions, counting the low. So what we should see here now is some consolidation. The market grids start to collapse in. It's going to take probably 3 or 4 sessions. We should probably see the top end of this run, and we should start to back up. What's going to happen is this 10-period moving average is going up right now at about $200 per day. We should start to see the 10 in the next 2 sessions cross through the 21 and 40 and probably set up some support around 23.5, maybe 24,000. So watch how that trades in there. The volatility is high enough that right now, just today, the market grid in itself within the expectations of volatility suggests a range, an extreme range of 22,418 on the downside, on the upside 27,081. That's the entire market grid. Typically, we had yesterday, we traded within basically R1. Let's see, R1 was 25, 20. I'm just trying to get this number. R2 was right there at 20. 25,915. R1 was, I'm sorry, S1 24,199. So I'm just trying to get these numbers here. We're pretty much right into that range. So we should see a sideways contraction from that standpoint. Okay, folks, that's going to do it for tonight. I think that, yeah, I see somebody, Pamela's talking about the 200 is sloping up solid. That was something we were talking about a few weeks ago on the Bitcoin, is that there was that upward slope. So these extreme long trends are still positive. And it's been interesting if you think about everything that's happened in crypto. Basically, Bitcoin is not really crypto, but everything that's happened in the digital coin space, we'll say, it's amazing that it's been able to trade up like it has. So it's definitely become, I guess, the go-to coin. Just looking at some comments that you folks have. That's funny, Nigerian. A comment somebody said, John Nigerian goes, anyway, folks, I would tell you, make sure you mark your calendars. As soon as we get done here, I'm going to go on Twitter and tweet out that about Jim Baker, Dr. Baker, and myself, and Phil Zweig being on Mario Fall's Twitter space tomorrow. They'll be already going when we come in, but we're going to carve out a spot. Between 11 and 11:30, they're going to get us on stage. So I'm looking forward to seeing a lot of you there, all 32,800 of you. Anyway, folks, have a great evening. Good day trading tomorrow. Looks like we still got plenty of volatility ahead and lots of bank stories to endure before we get through this I guess, current cycle. Anyway, have a great day trading. We'll see you on Twitter in the morning. And see you same time tomorrow night right here. Thanks a lot for watching. Make sure you hit the like button before you leave. Okay, folks, have a good evening. Hey, thank you, Smurfs. I see somebody, it was a busy night moderating. Thank you, thank you, thank you. Very grateful for all of you. Blue names, Smurfs, thank you.